Curious how to tell if a VC truly wants to invest or they're just being polite? Well, as a former VC, I can help you. When I was investing, I'd quickly feel the spark and deliberately communicate certain signals founders needed to recognize. So in this video, I'm going to show you the exact hidden signals VCs give founders when seriously interested, making it easy, safe, and dramatically more effective for you to navigate fundraising. Because spotting investor interest is a bit like reading body language on a first date. Once you know the signs, it becomes obvious who's really into you, because fundraising might feel subjective at first, but after going through it a few times, you'll start noticing clear patterns. And if you click the link below, I have collated about 220 plus investment memos from all of the tier 1 VCs like Sequoia, Octopus Ventures, A16Z, and you can use them and leverage them to see what they're really looking for. But these subtle cues can save you weeks, even months of chasing the wrong investors. Because imagine having the clarity and the confidence to focus your energy only on investors who are truly excited about your project and not wasting time with the others who aren't. So, how can you quickly identify who's serious and who's just nodding along? Here's 6 clear signs an investor is genuinely interested in what you're doing. So, number 1. When I was genuinely excited about investing in a company, communication became my top priority. I never let more than a couple of days pass without checking in. And whether it was sending a quick email or answering questions promptly, why was that? Because founders value speed, clarity, and certainty. And being responsive clearly signals this to founders that I'm serious about this, that I want to make an investment into you. So during meetings, I'd lean in, ask thoughtful questions, and make our intentions clear. Now, on the flip side, if an investor lets a week or more slip by without contact, that's usually a big flag. Slow or inconsistent communication means they're probably not fully invested in your vision. So what's the takeaway of this? You need to pay close attention to how quickly and consistently an investor communicates. Active communication is one of your strongest signals of genuine interest. So active communication is the first clear sign, but responsive alone isn't enough. Another powerful indicator of investor interest is what they actually ask from you, which brings us neatly into number 2. So when I was interested in a company, a simple 30-minute introductory meeting was never enough for me. They'll ask you for additional information, things like financial forecasts, customer data, product roadmaps, or market analysis. But they won't stop there. They'll also do their own homework behind the scenes. When I was excited, I didn't rely solely on the founder's pitch. I'd speak with other team members, reach out to industry experts, or connect with stakeholders who knew their business well. Why? Because investing real effort into understanding a business that I was potentially going to put millions of dollars into meant I was seriously considering partnering with them. And if an investor isn't proactively requesting more information or doing independent research and they tell you, it's likely they're just window shopping and not genuinely considering an investment. So how do you make sure you see this and understand if this is happening? Well, you need to look closely at how much effort an investor puts into understanding your business. This is proactive research and requests for additional information. These are clear signs that they're seriously interested, or you can start to see that they're moving around and asking other people around you. Now, proactively digging deeper is a strong indication of interest, but there's another practical step investors take when they're serious. And what that is they'll actively set up follow-up meetings. So let's explore exactly how that looks with sign number 3. So early in my VC career, I missed out on a great Series A deal simply because I took too long to make a decision. It was one of the first and most painful lessons I learned as an investor because great opportunities move fast, and I missed out on such an amazing opportunity purely because I wasn't being fast enough and someone beat me to it. I missed out on a great deal purely because of that. And the thing is, experienced investors understand that speed matters because every single one has learned the same painful mistake I did. Every single one that has a little bit of experience, I'm talking maximum a year, has lost an investment because they were too slow. So if they're genuinely excited about your business, they won't hesitate to schedule follow-up meetings. Often they'll even set up your next meeting right there on the spot or shortly after your conversation wraps up and give you clear next steps on what's happening. They'll actively look for reasons to meet again because they want to build a connection with you so that they can actually win your deal. Whether to dig deeper into your business or introduce you to their colleagues and partners, they're going to find ways to constantly speak to you and show how great they are. Bottom line, investors who quickly book follow-up meetings are signaling clearly that they're serious. They're willing to invest their valuable time and energy because they see potential in your company. So what's your takeaway then? Well, you need to notice how quickly investors schedule follow-ups. Fast, proactive scheduling is a strong indicator they're genuinely interested and you're top of their mind. But the thing is, investors who are genuinely excited often go a step further. They'll openly tell you they're enthusiastic about your industry and explain why your sector aligns with their investment strategy. So let's unpack exactly how this looks with sign number 4. So although it doesn't always happen, you can and should find an investor who's focusing their research on the same industry as you. This is a significant advantage, especially if they're explicitly telling you that this is part of their investment criteria and something they are excited about. I'll give a story. When I was an investor, I was a health tech investor as a main one, and my specialty was in mental health and addictions. I spent multiple years researching and understanding that. So whenever someone came to me with that experience and building in those industries, I was expressing enthusiasm for those sectors and stages and really understanding it in a detailed way. A great example of this was my last investment into Quick Genius, where I led their $12 million Series A. I made sure to communicate that we were experts in their field, cognitive behavioral therapy, had made other investments in their space already, and that I was specialized in mental health and addictions, and it was a major part I was doing. Because expressing that excitement about your industry is a strong signal. But investors who are generally excited often go a step further. They'll openly tell you they're enthusiastic about your industry and explain why your sector aligns with their investment strategy. They may express enthusiasm for your sectors or stages similar to yours, in which they have a strong track record or a shared investment thesis, showing that they can recognize the value they can bring to the table. But the most serious investors won't stop there. They'll start clearly demonstrating their commitment and moving beyond talk and into action. So what does real commitment look like from an investor who's genuinely interested? Well, let's dive into sign number 5. When an investor is truly serious, they'll start showing clear signs of commitment. They might openly discuss investing a meaningful amount of capital, bring up potential co-investment opportunities, or even explore ways just beyond money. Often, they'll proactively arrange meetings specifically to talk about your next big milestone or your future fundraising plans. But why do they do this? Because they want to experience what it's like working closely with you, almost like a trial run for future board meetings. They're testing the chemistry, seeing how you handle discussions and building a deeper relationship. And that's a core part of whether they make a decision. So if an investor is consistently demonstrating what a partnership could look like, that's a strong indication that they're thinking about investing into you and they're serious about investing into you. And I only ever did this if I was super confident that I wanted to give that founder a term sheet. So you need to notice when investors move past general conversations and start actively discussing collaboration and commitment. This is a clear sign they're genuinely interested, because clear commitment is powerful. But there's one sign that's even more telling, and it's when investors flip the script and start pitching themselves to you. So how do you recognize when an investor is genuinely selling you on their fund? So let's dive into sign number 6. One of the easiest ways I could tell if my colleagues were genuinely excited about investing into a company was observing how they ended our investor meetings. If they started actively pitching our fund, explaining why we were uniquely positioned to help the founder, I knew they were hooked. And there's a big difference between an investor simply describing their fund and passionately selling to you on why they're the best partner for your journey. The latter means they're genuinely excited and how they're actively trying to win you over. So it's not about an investor just doing their spiel about their fund and just saying their words. If an investor really starts selling themselves by specific people they can introduce you to, or why they have specific expertise in your industry, or who in their portfolio you should speak to, that's the strongest indication yet that you're close enough to securing a deal and actually then wanting to invest. This is the moment that you can feel pretty confident that you're heading towards a term sheet and you're on the right track with them. So you need to pay close attention to when investors shift from asking questions to actively pitching their fund. And when they start selling themselves, you're in a great position. So aim to get them selling. That's where you want to be. But remember that investors come in all shapes and sizes, and these signals can vary from person to person. And here's what you really need to keep in mind as you navigate your fundraising journey. So remember, every investor is unique, and the way they show interest can vary. Some might be reserved, but the signs we've covered will help you spot genuine excitement quickly. And as a founder, your job is to stay responsive, keep communication clear, and pay close attention to these signals. Doing this will save you time, help you prioritize the right investors, and ultimately increase your chances of securing a term sheet. So now that you know exactly how to recognize serious investor interest, the next step is learning how to master your investor meetings. I've put another quick video that covers exactly how to run an investor meeting like a pro, so you can turn interest into commitments. Check it out right here, and I'll see you there.